Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of September the 18th, 2017. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, as we can see from last week, we've bottomed out here based on around the North Korea. Everything kind of settled down last week, last Sunday, and the dollar recovered as the equities moved higher. The dollar having a very high correlation to the global equity markets. As the S&P 500 and the Nikkei more specifically go higher, the dollar tends to follow it. Now, you can see we've got now going into this coming week, there are further problems with North Korea. The dollar is hit into this key vantage point, 18-day predicted moving average, where we have failed at the 92.07 level, closing the week at 91.65. Now, our neural index is down. Our predicted short, medium, and long-term differences in our strength indicator are basically still below the zero line, telling us that the dollar is still under pressure here. Our predicted MACD below the zero line, but we do have a cross to the trigger on the upside, but our predicted MACD 43.5. Again, we're not showing any kind of real momentum in US dollar buying. Now, this coming week, we do have the FOMC. It also, I believe this is on this meeting, we have an economic report. Their forecasts, I do not expect it to be US dollar positive because the data hasn't really supported it. The CPI data, the retail sales, all relatively soft. So with that said, the dollar is likely to come under further selling pressure, but the FOMC is an absolute wild card. Now, with the euro is moved lower as the equity markets moved higher. The inverse correlation there, the equities higher, the euro-US pair lower. That key intermarket correlation is one you want to watch very, very closely. If we have further issues, if the problems with North Korea escalate, the euro will actually move higher, not lower. So you can see that we've closed 119. We've closed above 119.02. We've closed at 119.43. Above that key vantage point 18-day predicted moving average. Our neural index pointing higher, predicted differences pointing higher. Our predicted RSI at 58.1, and you'll notice here, very important to notice where the euro failed on the predicted RSI. We failed at the 40 level, so we had no real downside momentum on the euro. We've recovered and now we're pushing higher, and again closing that week above that critical 119.02. This is the area to watch the beginning of the week, but again, if things escalate with North Korea, the euro will go higher. Its counter pair, the US Swiss franc, this pair will also turn lower when the euro moves higher. So basically in a risk-off environment, we'll have money moving into the Swiss franc and into the Japanese yen. So we've had a big push up. Everybody, I guess, pretty much assumed things were going to calm down with North Korea. It didn't, and now you can see money coming out of the US dollar and moving back into the Swiss franc. We did close above the key vantage point level, 95.75. We're closing barely above it though, guys, 95.94. So we'll see how this one plays out, but we can assess the neural index down, predicted differences down, and again, we're not holding that 50 level on the predicted RSI, and we've had a significant failure on the predicted RSI at the 60 level. You can see that if we break above the 60 level, guys, then we're going to see upward momentum. Case in point here with the triple EMA cross to the upside. We see a crossover to the upside on the predicted MACD, the RSI breaking above 60, and that led to a substantial move from 94 all the way up to the 98 level. But this setup is not does not look to be forming in the same way. The only thing that can help this pair go higher is, again, if things completely settle down with North Korea and the equity markets continue to advance. Now, the British pound US dollar, I've been a strong advocate here that the pound is moving higher, that we are grossly undervalued, and finally the Bank of England is starting to agree with me to some degree as they're talking about potential rate hikes. That sent the British pound considerably higher. Now, with the trades recommended trades over the last several weeks, we've been long pound Swiss franc, long pound dollar. Of course, they've all come to fruition with this big move, basically just a waiting game. My only concern here is we've had a very substantial move in in a very short period of time. The critical VantagePoint 18-day predicted moving average is now coming in at, it's all the way down here at 131.31 with a close of 135.90. That is a concern for a retracement. Now, when I discuss retracements, they have nothing to do with Fibonacci or Elliott wave or any of this nonsense. It basically, guys, we run out of buyers up here. That's what happens. So when we look at that, we have to take that into consideration, that the buyers are going to get a little nervous here. Everybody wants value when they come into these trades. So I would allow this one to potentially retrace a little bit. Those key retracement points start at the VantagePoint 3-day and go all the way down to the 18-day. So the 3-day is the one that comes into focus at 134.49. That's likely where we're going to see the buyers come back in. We could see 132.63, but I don't think so. We've cleared some pretty significant resistance, and the pound should be getting ready to move higher. Now, I will point out the VantagePoint predicted short, medium, and long-term differences are moving into overbought territory. We're at 200 on the predicted differences, and the predicted RSI is at 94.9. So all of this is signaling it's overbought. That doesn't mean it can't move higher here, guys. It just means that it's going to be difficult to build on a lot of momentum up here. Before we get our next leg up, we're likely going to have a retracement. So watch the areas between 134.49 and 132.63. Now, coming into the US-Japan pair, this has been a very difficult pair to trade. We've had a break of significant support at the 108.10 area. We went all the way down to 107.10, but then again, North Korea came into the picture. Everything settled down, and the dollar-yen went screaming higher. The only thing here, guys, is you can see that we're not really making any significant headway to the upside. Excuse me, we've been up at these levels before, up around 111. And this looks like nothing more than a retracement in the broader trend reversal to the downside. So again, when you're trading dollar-yen, you're trading the S&P 500, you're trading the Nikkei. If these are going higher, money is coming out of the yen and going into the US dollar. So the probability is next week the dollar-yen will fall. We can see that we have a significant resistance zone up here between 111 and 112 with my own direct clients. We will be selling into these levels up here because I don't expect the conflict with North Korea to go away anytime soon. And even with these grossly overvalued equity markets, the dollar-yen still is unable to retake even the 115 area. So if we're almost 2,500 on the S&P, then the dollar yen in theory should be up around 123, 124. It's not. So the intermarket correlation there, I'm watching it very, very closely. But again, you know, we're trading news events here when we're trading the dollar yen. It's reacting to all of these things. One of the positives here for the dollar yen was the potential talk of the risk-on scenario of the Bank of England raising rates. So that may help move money out of the yen, but I think the North Korea conflict will take precedent. So when we look at our critical levels, 108.83, the key VantagePoint level, I do anticipate it's very likely we're going to retrace back down to this area. Now, when we come into our three main commodity currencies, again, the commodity currency here is the CAD. The CAD's had a big move to the downside, but that hasn't been based around very high oil and gas prices, maybe to some degree with the hurricane, but those prices are starting to come down again. When we look at the CAD, it did receive a big boost from the Bank of Canada on that rate hike, but as I've stated here before, I'm not convinced the Bank of Canada has this right because there was zero inflation in that report. When you raise interest rates, Economics 101, you need inflation. There is no inflation in Canada. So things are actually pretty soft. So we could be getting ready for a test higher here. 123.13, we're closing 121.88. So that key VantagePoint level starts at the 3-day starting at 121.74 and going all the way up to 123.13. So when I look at this, we do have a rather strong signal here from VantagePoint, which is the medium term crossing over the long term predicted difference in a very heavily oversold condition. So until this oversold condition works itself out, then we're probably moving higher. So keep that in mind. But right now, US Canada is likely to move lower, but it will depend on what happens with oil and gas prices. and commodities right across the board, to be perfectly blunt. So we'll be watching it closely, but again, the indicators from VantagePoint are suggesting that this is corrective in nature. And once that corrective move is done and we retrace back into this 123 area, we potentially could be getting ready for the next leg down. Now, with the Aussie US and New Zealand US, Aussie has very strong support down here at the 79.10 area. Our key VantagePoint 18-day predicted moving average, you can see we've spent the last 3 days bouncing off this level, 79.80. We're closing at 79.99. Our new top that we have in place right now is the 81 level. I suspect that the 78 level down here on our swing low will contain any downside. And before it can move lower, we have to break through this 79.30, 79.20 area, which is going to be very difficult as money moves into the Aussie currency. Now, our indicators are very mixed. Our predicted RSI at 50.9. Predicted MACD is crossing the trigger to the downside, but we're above the zero line here, guys, so it's still technically up. Now, our predicted short, medium, and long-term differences are very conflicted here, but the neural index is still pointing higher off of this key VantagePoint pivot area, the 79 area. So we'll watch this area very closely, but in a risk-off environment with North Korea, that should actually help boost the Aussie currency to some degree. The same thing would apply to New Zealand US. You can see that we have very strong trend line support here coming in about 71.49, that area that I talked about in last week's Forex Weekly Outlook, and suggested longs off this area. You can see that that has come to fruition. We've had a big move up, but we must break through this resistance zone around 73.50. We're closing the week 72.89 above the critical VantagePoint 18-day predicted moving average at 72.54. So things do look good for New Zealand to move higher. Aussie New Zealand under a bit of selling pressure, which basically has us buying New Zealand a little bit more than Aussie US for this coming week. But again, we have a very, very busy week ahead of us with the FOMC. Be very careful of that. And of course, limit your trade on Sunday and Monday as we see what this outcome is going to be with this latest conflict with North Korea.